Welcome back to US Stock Express for your market update on November 17th, 2025. So what's on the docket today? Can the explosive rallies in biotech and AI keep up their momentum, or are we due for a pullback? Why is there suddenly so much pessimism around tech hardware giants like Dell and HPE? And will Lululemon's booming growth in Asia be enough to calm investors after its recent slump? We're diving into all of that, so let's get started. Well, there was no escaping the sell-off today, as we saw a sea of red across the major indexes. Leading the decline was the Russell 2000, which took a notable hit of nearly 2%. Not far behind, the Dow Jones slumped by 1.16%, while the S&P 500 dipped just under 1%. And even tech couldn't hide from the pain, with the Nasdaq 100 falling 0.85%. Let's just say it was the kind of day where you might not have wanted to open your portfolio. But it wasn't all bad news. One bright spot was the biotech sector, which is surging on potential deregulation and a wave of mergers. For investors looking to get into this high-risk, high-reward space without betting the farm on a single company, the SPDR S&P Biotech ETF, ticker XBI, offers a diversified play. Now let's shift from a potential investment to a policy move that hits a little closer to home: your wallet at the grocery store. In a partial reversal of his earlier Liberation Day policy, President Trump has signed an executive order to lift tariffs on certain imported foods. And speaking of major moves, let's talk about Google. Its stock popped over 3% after a regulatory filing revealed a massive, nearly $5 billion bet from none other than Warren Buffett's Berkshire Hathaway. This huge vote of confidence from the notoriously selective firm gave GOOG a major boost on a day when most other big tech names were struggling. Sticking with stocks in the spotlight, let's look at Lululemon. Its stock actually fell 3.8%, but the real story here is happening overseas. Lulu is seeing explosive growth in Asia, which is quickly becoming its primary engine for expansion as its core North American market takes a breather. Now from retail to silicon, let's turn to AMD. Despite a 2.5% dip in its stock price, the mood is overwhelmingly bullish. Analysts are reaffirming strong buy ratings, captivated by the company's roaring AI ambitions and a growth roadmap that forecasts over 35% annual revenue growth. But the AI boom isn't creating winners everywhere. In fact, it's causing some serious headaches for companies like Dell. The stock took a significant hit, falling over 8% after Morgan Stanley delivered a rare double downgrade. The bank's concern? That those same soaring memory chip prices powering the AI revolution will severely squeeze Dell's profit margins. And the pain wasn't isolated to hardware. The online travel giant Expedia saw its shares take a significant nosedive, falling nearly 8% in a single session. A drop this steep suggests investors are hitting the panic button, likely over worries about softening travel demand or intensifying competition. Another stock leaving investors feeling powerless was Generac. The power generator company saw its stock fall by 7.1%, significantly underperforming the broader market on the day. But let's pivot to a company making strategic moves beyond its daily stock price: Coinbase. Coin is aggressively expanding its international footprint and diversifying its revenue through acquisitions. The goal is to become the industry's premier everything exchange and reduce its heavy reliance on volatile U.S. crypto trading fees. Unfortunately, the margin concerns we saw with Dell are spreading across the hardware sector. Hewlett-Packard Enterprise, or HPE, saw its stock take a 7% hit after a downgrade from Morgan Stanley, which signaled concerns about future profitability as those soaring memory chip costs continue to threaten margins. And the bad news for hardware didn't stop there. HP Inc., ticker HPQ, also took a nosedive, with shares falling nearly 7% in a single day. It appears investors were hitting the sell button ahead of its upcoming earnings report, which is projected to show a dip in earnings per share. Shifting gears to retail, used car dealer CarMax is now facing a multi-front legal battle. Multiple law firms have filed class action lawsuits, alleging the company misled investors by overstating growth prospects that were actually inflated by a temporary tariff-driven buying spree. This news, combined with a surprise CEO departure and disappointing earnings, drove the stock down sharply. Finally, let's look at Texas Pacific Land. TPL saw a significant 6.4% drop in its stock price, and here's the head-scratcher. This decline happened despite a wave of new institutional investors buying in and the company posting revenue that handily beat expectations. It seems even a solid dividend announcement and some insider buying weren't enough to appease the market today. That wraps up today's market update. Thank you for watching. Stay informed, and we'll see you next time.